Hey everyone, Carvana reported first quarter earnings results and the stock is soaring in response. It's up 28% after announcing these earnings. It was up much higher. It's given up some of those gains. So in this video, I'm going to review Carvana's earnings results and answer if this increase in stock price was justified or if it's just another unjustified boost in the stock price based on demand from retail stock investors that sometimes tends to increase the price of Carvana stock without anything to back it up. So let's begin. So revenue decreased by 25% at Carvana to 2.6 billion. The net loss improved to 286 million, up from 506 million year over year. So that was big news. Also big news, the gross profit per vehicle increased by $1,470 to $4,303. The market for used cars prices improved for almost every month this year. The most recent month was the only month that saw used car prices come down. So that has been good news for Carvana. The number of units sold decreased by 25% to 79,240. Of course, as interest rates have increased, people have been less interested in buying used cars. And as the supply of new cars has increased, that has also decreased the interest to buy used cars. Also, Carvana is proactively reducing its inventory. Inventory in the quarter decreased by 55% compared to the previous year and 21% from the previous quarter. That's really good news for Carvana stock investors. Why? Because the inventory was the reason that Carvana got in trouble to begin with. Carvana was paying a lot of money to get this inventory because it was expecting to sell it at the rates it was selling these cars during 2020 and 2021 when consumers had more money in their pockets and the demand for used cars was much higher and the supply for new cars was very constrained. But then Carvana found itself in a situation where it had all this inventory and then the market for cars changed because supply of new cars came online, interest rates increased, and there was no more stimulus checks that was making people feel wealthier and in a mood to spend a lot of money on cars. So it found itself in wrong footed and now it needs to correct that balance, and it's done a good job here reducing inventory by 55%. It also slashed advertising spending by 64% compared to last year. Management is doing a really good job in trying to bring the business back to a more sustainable level after it got ahead of itself investing in growth because of the boom times during the pandemic. The company now has 488 million in cash and 1.5 billion in inventory. Compare that to long-term debt of 6.55 billion. The cash flow from operations improved to negative 66 million. This was up from negative 593 million the same quarter the year before. So big improvement in terms of the cash burn, mostly because of slashing costs and reducing inventory purchases, right? So just trying to get rid of the inventory you have and not spending money on any new inventory. That saves you a lot of cash and it brings in new cash as you get through that inventory that you have. Still, if we compare Carvana's cash balance, so it has 488 million in cash and it burned through 66 million in its most recent quarter. That has given the company a lot more time to right the ship now. At this rate, it can go through roughly, let's say, 7 quarters before it runs out of money. At this rate of cash flow from operations, it gives it 7 quarters before it runs out of money. So the risk of bankruptcy after this quarter decreased meaningfully. And the risk of bankruptcy was a non-zero number that was growing for Carvana because it was burning through so much cash. So the fact that it reduced the bankruptcy risk is a big deal for the stock, because in the event of bankruptcy, typically shareholders get wiped out. They get zero in most cases. So by reducing that case of getting zero, of your stock price going to zero, that created enthusiasm for ownership in Carvana stock. So you can understand why the stock price jumped by over 20%, 27.9% as of this recording, because of these quarters results. So that's understandable. That's justifiable. And remember, this stock is probably going to continue going through these wild fluctuations, because it's so close to being an insolvent business, a business that's going to run out of money. So every time something comes out that makes the probability of bankruptcy increase, the stock price will crash. And then when there's news that comes out that reduces that probability, the stock price is going to jump. So right now, the stock price is trading with extreme volatility because it's so close to the zero bound. As it creates some distance and puts itself in a safer position, the volatility in the stock price will also calm down. So that's all I've got for this video. To reiterate, to answer the question, yes, the stock price jump after this quarter was justified. The company had a good quarter. It took steps in the direction it needed to, and it made good progress. So a stock price increase was justified following the good quarter from Carvana. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.